All right, this video is going to review the actual loan estimate. So um, once you're under contract, the lender will provide what they call the initial loan disclosures, several pages long. But these 3 pages here are essentially one of the most important pieces. They're all important, but these 3 pages here are very important for you to review. So when that initial disclosure goes out, this is going to break down um, the loan amounts, interest rates, payments, and cash to close. And essentially, that's what we're going to review today. So let's take a look at this. The property address should be right at the top left corner. If it's rate locked or not, it's going to indicate if it's rate locked or not. So it's super important to review that with your loan officer. And the type of product. So loan type is whether it's conventional, FHA, or VA USDA. So if it fits in one of those, that should be selected. So if you go down over here, which says loan terms, that loan amount, just want to really cover a few things here. Loan amount, if the loan amount's not exact, like what you need when you close escrow, those types of things can be adjusted through this process. So it's completely normal sometimes if things do change along the way. Interest rates are subject to change as well. So full disclosure on that, like if the loan is not rate locked, or maybe it was rate locked, but there's terms in your approval that affected your approval, right? So maybe through underwriting, some terms affected that, and that interest rate could change as well. But when it's rate locked based on a specific time period. So it's always going to go back to that pricing of that day. And then we have the monthly payments, which is principal and interest if it's an amortized loan. And it clearly states right over here, can this amount increase after closing? It's going to indicate that if that's the case. If it has a prepayment penalty, balloon payment. So essentially you want to go through this thing from top to bottom, and any questions that you may have, I would just write them down and just review that with your loan officer. And right over here, if the loan has mortgage insurance, it's going to list it right over here. So the projected payments, as well as your estimated escrow accounts. If you're going to be impounding your taxes and insurance, it's going to be listed there. And it indicates that right over here in escrow. So if you escrowing the property tax and insurance, now indicated here. These numbers, again, are subject to change, but the loan officer has done their job. They've got a very good idea what the proposed amount's going to be. Down at the bottom, it's cash at closing. This is how much it would require to come into the close. If you put any money down as an earnest money deposit, it's completely separate from the actual down payment of the loan. That earnest money deposit, though, gets applied towards the down payment. So it may not be reflected here a lot of times. So that's another thing that you definitely want to review with the loan officer. Estimated cash to close. This includes the total closing cost, which we're going to review next, and loan costs and any type of cost credits. And then right over here, that's the estimated closing cost, which is going to include your down payment as well. So let's take a look at page 2. In this sample right over here, it's very simple. You got origination charges. So you're either paying points for a loan, no points, you're probably going to be paying a higher interest rate. I hate to, I like to say it like this way: there's no free loan out there, right? So the lower the points are, typically the higher the rate. The with some points is going to bring the rate down. So you just want to take a look at that. These are all, something that you want to discuss with your loan officer, making sure that you're on the same page with them. And then these are all the services that you cannot shop for. These are just required for the loan. So it's going to be listed there, from appraisal fees, credit report fees, things like that, right? Down on number C, these are items that you can shop for. So this is typically where you're going to find all your title fees, escrow fees as well. And it's going to be all lumped in there. So that's something that these are on purchase transactions. These are pretty standard, meaning the industry is so competitive. There's so many different publicly traded title companies and escrow companies out there. It's a very competitive market, but for the most part, these are the fees that they're going to incur during the transaction. And we're going to swing towards the top right over here. So if you go to other cost, you got some recording fees, just records the documents that are required to transfer over the property into your name. And then you got the prepaids. So the prepaids can, and G, the initial escrow payments at closing, this actually can drastically increase the closing costs of your loan. So you want to take a look at that as well. Some home buyers, they choose to opt out of collecting the escrows through the closing, and that means they're going to pay that when they're due. So essentially, if you're impounding your escrows, you're basically giving it to the company that's going to service the loan, and they're going to hold that money for you. So you can hold it in your bank account. It's going to lower your cash to close, or you can give it to the servicer and say, "Hey, hold this money and pay them when they're due." So that's essentially what this is all about over here. Except for the prepaids, like homeowners insurance, you're always going to be required on a purchase to get homeowners insurance. So that's why it's got 12 months right over here and $960. Down over here, this is on the G part. That's more for the impounds, right? So when you add up A, B, C, E, F, G, and anything that's under other, any types of credits, that's your total closing cost for that transaction here. And when you add up your down payment, or in this case, it would be the down payment that I have selected here. So you add up the closing costs plus your down payment would be your total cash to close. On the next page, it reviews the a 5-year comparison on the APR as well as the total interest percentages. So take a look at that on that page as well. If you have any questions with that, feel free to give us a call at the office or talk to your loan officer. Thank you so much.